Good morning, traders, and welcome to BCI's daily market analysis. Let's walk through today's key drivers and levels across major assets. First up, let's have a look at the US dollar index, DXY, which is holding steady around 97. This comes after Wednesday's ADP data revealed an unexpected loss of 33,000 private sector jobs, raising fresh concerns about the health of the US labor market. On the trade front, President Trump announced a new agreement with Vietnam that includes a 20% tariff on imports. This deal lifted risk appetite as markets took it as a sign that progress on the trade fronts could ease some of the broader tensions. Technically, the dollar index is trying to recover after hitting a multi-year low of 96.38 on Tuesday. While it's showing signs of stabilizing, the price remains capped below the 9-day simple moving average at 97.5. The index has slightly breached the lower line of a falling wedge pattern, a pattern that can sometimes signal a reversal, but we need to see a daily close above the wedge resistance and the 9-day SMA to confirm a strong recovery. Momentum-wise, the RSI has nudged up to 30.5, suggesting selling pressure is easing, but the outlook remains cautious. Key support levels are at 96.38 and 96. Next up, let's have a look at WTI crude oil, which is trading near 66.3 a barrel this morning. Prices climbed around 3% on Wednesday, driven by geopolitical developments, notably Iran's suspension of cooperation with the UN nuclear watchdog and progress on the US-Vietnam trade agreement. That said, an unexpected rise in US crude inventories has limited the upside for now. A ceasefire between Iran and Israel has also helped ease concerns about potential supply disruptions. Technically, oil is holding above its 9-day simple moving average at 65.93, with further support at $65. If those levels give way, we could see a pullback towards 63.72, last week's low. Momentum indicators are neutral for now, with the RSI hovering around 48. To the upside, a break above Wednesday's high of 66.75 and then the 67.08 and 67.37 level could open the door to $68. Next up, let's have a look at our favorite gold, which is trading near 33.30. Prices rose sharply on Wednesday after the weak ADP report stoked hopes that the Federal Reserve may cut rates earlier than expected. Possibly as soon as September. This has shifted focus firmly on Thursday's non-farm payrolls report for confirmation of the labor market's trajectory. Technically, gold is holding above its 50-day simple moving average at 33.21, which is acting as key support. The price action shows that dips are still being seen as buying opportunities. Resistance it's near 33.63 and 33.65, which is the recent high, with $3,400 as the next target if the bulls can push through. A sustained break above that level would further strengthen the bullish outlook. Lastly, the Australian dollar slipped to around 65.70 on Thursday, ending a 3-day winning streak. The move followed weaker than expected trade data, with Australia's May trade surplus shrinking to around $22.4 billion, which is the smallest number in nearly 5 years, as trade with the US has slowed down. Software services PMI data out of China also weighed on sentiment. Still, expectations of a Fed rate cut helped limit losses. On the technical side, the Australian dollar remains in an ascending channel, with the pair trading above the 21-day simple moving average at 65.16. The RSI above 50 points to a continued bullish momentum. A break above 6590 could open the way towards 666 on the downside. Watch for 6516 and then the key support level at 65 cents. Well, that's all for me today for this daily market analysis. Keep an eye on data coming out of the US. Trade safe, stay smart, and as always, happy trading.